Boy, that time flies when you're having fun. It's about that time of day again here, folks. My name is Joseph. Thursday evening, December 13th. Welcome back to your nightly newsletter. You know, I help new traders just like you earn consistent profits using a simple 3-step trading strategy. My plan tonight is to identify the best opportunities setting up for Friday morning's trading session. And we're covering crude oil, S&P, Nasdaq, gold, and euro in tonight's video. You know, crude is bullish with a short covering rally, so I'm looking for buying opportunities, but I don't want to chase this move higher. I got my eyes on a combination area of a reversal line and the low of a hidden channel for Friday morning. The S&P is bearish and rotating back to the low of the range tonight, and my job tomorrow is to find selling opportunities using buyer failures before we get to that range low. Nasdaq is also bearish with a weak move going lower, so I'm staying patient. I'm waiting to sell high. I'm going to treat this almost like a range tomorrow on the Nasdaq, looking for bull traps and buyer failures to sell off the high of a hidden channel. And of course, we can't forget about gold. Gold is bearish with a wide, almost flat channel, which tells me to trade this just like a range. So whenever I see a range, I know it's the 2-try rule is the best option to sell above those highs. And last but not least, on the euro tonight, euro is bullish and still trying to retest that range high. And with the sellers failing right now, I'm watching for a crown reversal pattern to buy the low tomorrow morning. Well, we're back in the action again this evening with our final nightly newsletter of 2018. And although I would love to kick back and reminisce with you about all the good times we've shared in what has been a fantastic year here of 2018, we got to roll those sleeves up. We got some work to do because we all know those presents under the tree for the kids aren't going to buy themselves, are they? But before we jump into the charts and put the plan together for Friday morning session, I need to remind you, make sure you never miss another video by joining our mailing list. You can find the opt-in form right at the top of our blog here at Sideways Markets. I'll put all the links in the description of the YouTube video. Also, if you're not joining me tomorrow in the trade room, we open up 8 o'clock Eastern time every morning. If you're not planning on being there, the next best option is to grab all those charts from tonight's video. There's a big button right below the video tonight on our blog that will allow you to download all those charts. And don't forget, if you have any questions about anything covered in this video tonight, we have live support and a toll-free phone number. I am not a robot. I'm a human being. I look forward to answering your phone call, taking your live support questions. Use those tools in the upper right-hand corner. And don't forget, if you like what you see, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post something new. And as always, it is awesome to be here with you guys, especially on this final kind of wrap-up newsletter here of the year. But again, we got some work to do. Let's kick this thing off here by taking a look at tomorrow's trading schedule. Tomorrow's Friday, December the 14th. And of course, anytime I talk about a Friday, I'm always thinking early in, early out. So tomorrow is definitely not the morning to hit the snooze button. In fact, I would recommend set the alarm a little bit earlier tomorrow because something tells me with the ECB announcement behind us and with contract rollover likely right around the corner, early tomorrow in the session is where all the action or all the good action is probably going to be. So early in, early out on Friday mornings. And my rule of thumb is I've always got to have a good reason to be trading after 11 o'clock on a Friday morning. As far as news goes for tomorrow, you'll notice there is no shortage of economic news. If you're in Europe or if you're trading the European session, you've got a whole plethora of news, 3:15, 3:30, 4 o'clock, and 5 o'clock. I wouldn't worry too much about that particular news, but because we had the ECB announcement today and because we heard a very, what's the word? I don't want to say pessimistic, but we definitely heard words out of Mario Draghi's mouth here this morning, all right, that sounded like he was setting things up for a relatively dreary beginning of next year. I'm assuming most traders are seeing that same thing. They're reading between the lines. We're expecting higher rates next year. We're expecting a slowing economy. That means people tomorrow are going to start placing their bets as we go into the end of the year on things like currencies and metals. So euro and gold are definitely going to be on our radar right tomorrow tomorrow morning early in the London session, especially with the reaction, right? All people coming back and reacting from that ECB announcement, right? This morning at 7:45 Eastern time. As far as news tomorrow morning in the trade room, don't forget we open up our trade room every morning at 8 o'clock Eastern time, and we're going to have a front row seat for that back-to-back retail sales into industrial production. I am definitely excited to get this party started early tomorrow morning. We'll be in our trade room 8 o'clock Eastern time. We got big news at 8:30. Big news at 9:15. I would imagine the meat and potatoes tomorrow are going to be between 9:30 and 11 o'clock Eastern time. Again, we'll try to get there as early as we can. See if we can get some opportunities coming into that 8 o'clock hour. We'll sit on hands around that news, let this thing go into the opening bell, and see if we can't grab some big opportunities going into that opening bell at 9:30 a.m. Eastern time. And again, early in, early out means got to have a good reason to be trading tomorrow, right after 11 o'clock Eastern time on a Friday. Don't forget tonight's plan. We're going to put the plan together for tomorrow morning's trading session. And as always, right, you don't need to do it alone. We do it together every day in our trade room. Hope to see you there tomorrow morning at 8 o'clock Eastern time. Now, jumping into some charts here tonight, we got crude oil, S&P, Nasdaq, gold, and then why don't we wrap it up with the mighty euro? Starting off tonight with crude oil. Crude is bullish with a strong spike higher, a trading range, and a hidden channel on the chart this evening. Now, it's not difficult to see. The bulls clearly have some nice bullish momentum going higher. This is a short covering rally coming off the lows of this weekly trading range. Now, if you've tuned in with me this week, right, you know that we are battling back and forth in a beautiful trading range right now, rotating from the low at 50.65 up to the high at 53.84. So of course, we're rotating off the low. We're expecting those buyers are going to want to retest that high up at 53.84. That is the objective for the bulls. We got a bull market, nice bull momentum. The problem is I don't really want to chase this move going higher. I'd rather buy at support levels, buying pullbacks and buying traps. So I have my eyes on the low of a hidden channel. You'll notice this hidden channel I have drawn up. I'll get the low of that hidden channel on my radar. And of course, I've also got that beautiful reversal line there, which they haven't come back to test. A lot of times we see those reversal lines, you'll notice back here, right? We come back and hit those, right? Hit those reversal lines. We haven't done that here now. So we got one we're waiting for here at 35. And boy, I hope we get a chance here to combine the low of that channel, right, with that reversal line at 35. So we're bullish. We've got a little bit more time before we reach the objective up there at 53.84. So we know where we're trying to go. All we need right now is a bit of a pullback, right? Get off of these highs. And really what I'd like to do is kind of go over the three different scenarios that I'm preparing for tomorrow. And then of course, we'll trade them together tomorrow in the trade room. First scenario is if we do get that pullback, couple different variations of the pullback I'm always looking for. One is the two-legged pullback, which will basically be one leg, two leg. It'll create that trend line coming down. We'll then use that trend line not as resistance, but as support here, right? You'll notice how I draw that trend line coming off that high. We'll use that trend line as a support level, right? As we rally back higher. Another option here, if we don't get that clear two-legged pullback to draw that trend line over, maybe we just get a strong, sharp correction off of that high. Maybe we see some profit taking, price pulls back. In that case, if the market really pulls back nice and strong, I would imagine now we'll be below that moving average, right? We'll get those sellers now to try to sell off of that moving average. Once we see those sellers trying to sell into that pullback, now we know where their stops are, and we can buy directly right into those stops for what I call a 1-2 try failure pattern. We'll buy right into those stops there, just above that swing high there. Now, as the market goes higher, I don't want to chase after it. I like to make a habit of buying at support, so I'm not trying to chase after it here. I'm going to mark up a new hidden channel. And then I'm going to try to use that sweet spot right here, which is the high of that swing combined with the low of that hidden channel. And that will allow us now, right, to get that nice rally, buying off of that low, buying off that moving average, right? You can see how I'm illustrating that for you right now. So a couple options here on the pullback. One is that two-legged pullback. We can use, right, that trend line as support. Next option is that sharp pullback followed by seller failure at the moving average. We call it a two-try failure, right, into that hidden channel pullback pattern, right, as we go higher. It's all about buying low, not buying high. And of course, those will be three easy entry patterns that we're looking for on that pullback tomorrow. Now, if you're here for the first time today, or you want to get a deeper dive into all three of those entry patterns, along with all of my other favorite entry patterns, I've got a free trading course for you. I'll put a link up here in the upper right-hand corner. I'll also drop a button right below the video tonight on our blog. Grab that button right below the video tonight on our blog, or hit up that link in the upper right-hand corner and grab that free trading class. You'll learn all of my entry patterns as well as all my favorite ways to draw channels, ranges, and I'll send you hundreds of examples of real patterns we find every day in our trade room. But what if we don't pull back, right? What if we don't get the pullback here right now? Then what do we do? What if we go sideways here? Very, very common to see a big market move like that, and nobody wants to take profit, but nobody wants to buy either. Sometimes these will just sit here and go sideways. If we sit and go sideways, then what do we do now? I'm going to take the size of this range, and we're going to learn more about this in a moment. Size of this range, bring it down, that will create support, right? So imagine now we take the trading range, we take the size of it, copy and paste it down, and that creates a level of support down there. So imagine now that level of support, let's say right down here, right? And so now we look for that same basic entry pattern we looked for before. It's the one try, it's the two try, that failure, right? That 1-2 failure, 1 and 2, right? Two try failure pattern. Just remember this, anytime we have a trading range, we always look for those failure patterns, and the most reliable failure kind of variation of failure would be using that two try pattern. So as the market goes lower, that's one try, let it pull back, let it try a second time, and then once we start seeing that second try start failing, right, we'll grab this sucker and run back up to retest the high. Now another option here that we have for tomorrow is, what if it keeps going higher? What if we don't get the pullback, but we don't get a range either? Then what happens here? Well, if we keep going higher, it'll probably turn into a spike in channel. You'll probably see a small little narrow channel start to form on the chart. If that's the case, remember, the best way to trade a spike in channel pattern is to go back and look at those first couple swings, right? We call this the base of that spike in channel, right? Think about the point where the channel runs into the spike. That first pullback is there, right? This becomes the buy zone down here. We'll look for that one, that two, right? That failure. Oftentimes these pullbacks on spike and channels are quite strong. So once we see that strong move down, we'll wait for those bears to try again and look to buy right into those seller stops, right? To run back up to retest the high. So get a good plan here. We know if price pulls back, we know if price goes sideways, and even if it keeps going higher here, right, we know to stay patient and wait for price to pull back so we can buy off of those lows. Now, what if we get all the way up to the highs here, right? What if it ends up all the way back to the highs? Then what do we do? Well, now we have the top of that big range, and we don't want to buy the high of the range. What will probably happen is, if we find our way all the way up to the highs here, let's just say, that's going to be a real strong bullish momentum. Now, you could go out and just use the two-try rule, right? Like we always say, whenever there's a range, right, look for the two-try failure pattern. But because there's so much momentum here, we've got to be a little bit more, what's the word, conservative, right? Let these buyers exhaust themselves, right? Or as I always say, let them wrap that rope right around their neck, right? So they can hang themselves with it. As we go higher here, right, that momentum, I would expect buyers now to come back and try once to go higher, try twice to go higher. What do we call this, guys? We call this the nested two try. So assume now we get that strong move up, right? Assume those buyers get paid all the way back to the high of that range. We're not going to just sell the high because that momentum will be way too strong going higher. Instead, I'm going to let those buyers sort of buy one pullback, lower low, buy a second pullback, and then that will give the buyers all the opportunity they need to continue this market going higher. If they can at that point, we're going to sell this thing back down into that range tomorrow, and we'll look for different variations of that nested 2-try with all of our clients tomorrow morning in the trade room. Last but not least, how do we reverse? What would a market reversal look like? Well, in a bull market, a reversal will look for what we call the 1, 2, 3 reversal pattern, right? The 1, 2, 3 reversal. And just like the name suggests, there are 3 steps to this reversal. Step 1 is going to be a strong counter trend move. Step 2 is going to be a pullback to the moving average. It's got to pull back to the moving average, right? If it doesn't count. Step 3 is a run off the moving average. Okay, so step 1 is a counter trend move. Step 2 is a pullback to the moving average. Now remember, most of these will fail and price will go running back up to that range high. And that's some of the stuff we're watching for tomorrow in the trade room, right? If we don't get it and they take off to the downside, now I'm going to mark up that low. I'm going to mark up that low, find the hidden channel off that high. And then, of course, there's my sweet spot right there. I'm going to look for a selling opportunity off of that low. And where's my target? Yeah, target's back down at 50.65 here for those bears tomorrow. And again, we'll do the same thing over again. Buying low, selling high. It's a range. So we're using 2-try failure patterns. It's a wide range, which, as we talked about this week, allows for big momentum swings. So I'll be keeping my eyes open on that nested 2-try variation. Don't forget, you can learn a whole lot more about all of this information. Grab that free course in the upper right-hand corner. You'll find that information icon in the upper right-hand corner, or grab that big red button below the video tonight on the blog and get registered as a brand new member. I also want to do, right? I also do want to remind you guys too, we are going into that time of the month right now. Oil usually rolls over around the 18th of the month, but the last couple months we've seen early rollovers on oil. This is the 119 contract right now. Tomorrow, I don't expect to see the 219 contract, but I will be keeping an eye on tomorrow, but more importantly, early next Monday, Tuesday, and Wednesday. Keep your eyes open for the contract rollover, not contract expiration, but rollover to the 219 contract, the February 2019 contract for oil futures. Now, speaking of oil futures contract rollover, we're done on oil here right now. Don't forget, tomorrow morning, 8 o'clock Eastern time, right? Tomorrow morning. Speaking of rollover, some additional markets we're watching for contract rollover are the E-minis. Now, you probably are starting to get some emails from your broker, right? Probably getting some pop-ups on your charting software right now about contract rollover for the E-minis. We're not quite there yet. Of course, the E-minis are quarterly rollovers. And right now, as you can see, as I kind of zoom into the market analyzer right now, the S&P, just as an example, we still clearly have more volume right now on that 12-18 contract. So it looks like tomorrow we'll probably still be on the 12-18 contract. But again, keep your eyes open next week on that 319, right? The ES 319, the YM 319, the ZB 319, NQ 319, Euro 319, right? We're pretty much watching rollover on all of the quarterly rollovers. So keep it in mind as we go into next week as well. How about for tomorrow though? Again, probably going to be still trading this 12-18 contract. The S&P is bearish with a trading range, a bear channel, and a measured move on the chart this evening. The trading range is the big clue here. This is nothing new. We've had this range in the charts, right, almost all week here this week, right? There's your trading range high being up around 74, range low being around 32. So we know that whenever we have a trading range, yeah, we're going to rotate from the high down to the low to the high down to that low. And you can see right now we are still hunting for the low down at 32, 33. So the range is definitely a very big clue right now. It tells me to keep looking for selling opportunities until we get down to the low of that range. It's very, very important to remember that once we get down to the low of this trading range, that's our cue now to stop looking for sells and start looking for a turn so we can then start to buy. The channel here is another big clue. We got a couple channels here on the chart right now. First one here is this one right there. This looks like the most actionable channel right now. You'll notice, right, we got that channel there. That channel will tell me to look for selling opportunities up around that high. But I'll tell you though, what really gets me excited is this larger channel. If I get rid of these little guys, let me kind of deconstruct this chart here for you real quickly here. If I get rid of these distractions here, you'll notice that large wide channel we have. If I double click and then add on the midline, this is NinjaTrader, so of course I'll add the midline on, then you can see it really fits nicely, right? Adjust that channel low like that, right? Really fits nicely off of that midline, off those lows, and that leaves this lonely guy up top here, right? That top is gonna be a great spot. I hope we can get it tomorrow. We might not get it, but I hope we'll get a chance here, right, to really grab that S&P off of somewhere, right, up around the high of that big wide channel, right? Now, wide channels. We talked about this earlier this week. Anytime we have a wide range, anytime we have a wide channel, what happens? Momentum, right? Momentum. So as you can imagine, if we do make that big run higher here up to the high of that channel, that's going to be some pretty bullish momentum, right? So we're going to want to wait. Don't try to sell that high. Let those buyers try to buy it, and then we can sell into their failure, right? Very important. Remember, when you've got a wide channel or a wide range, you always want to anticipate you're going to see a lot of momentum that will build as the market rotates back to that high. And because of that momentum building, we expect buyers to probably want to buy that pullback. I'll wait for them to try to buy it, and then we'll drop that in, right? Once we start seeing those sellers start to fail, then we know that momentum will have shifted and we can sell back down to retest that low. So the plan is relatively simple. I want to sell this market, it's bearish. I want to sell it near the high of this channel, right? And again, because that channel is so wide, we're going to probably want to use that 1-2 failure to really embrace the momentum, right? To kind of absorb that momentum before we go trying to sell it back down again. So let's play that game. What if price goes up? What if price goes down? What if we get that pullback? What if we don't get the pullback? What's the plan here for tomorrow? Well, first of all, hopefully we do get that nice strong move up. It's a relatively wide channel, so strong move up. I would expect you're going to see buyers now, right? Those buyers here will try to buy that pullback. Once they do, that qualifies now as a 1-try, 2-try failure. We also know now where their stops are, and we can look for that sell going right back down again into those stops. What if the market goes sideways here, right? What if it goes sideways? We can almost kind of see, this thing setting up here right now with a trading range. And if we start going sideways, right, if we keep on rolling sideways here, what's the plan? Well, it's a bear bias into a trading range. What does a trading range always tell us? 2-try failure patterns. Bear bias says sell above the high of that range. So we'll try to go once, we'll try to go twice and sell off that high, right? 1 try, 2 try, and then sell off that high. Also, too, when it comes to a big wide range like that, because that momentum is so strong, I'm also going to be looking for what we call a nested 2-try, which we talked about briefly on oil. That would be where we allow the buyers to take it higher once, and because they're going to try to retest that high with that second leg higher, I want to let them try twice to do that. Once, twice, and once I see those buyers successfully trying twice to retest that high, now I can sell into their failure, right, for that collapse back down again. So the bottom line is if we do end up going sideways, we're not going to change our plan. We're just going to adjust now the type of pattern we'll look for to sell up around the highs of that channel. Now, last but not least here, what if we go lower here? What if we don't get that move higher? What if this thing keeps rolling lower right now? If it rolls lower here as we go, I'm going to look at this almost like a spike in channel. And as I mentioned before, anytime we have a spike in channel, what do? Yeah, we look left, we find those prior swings, right? Find those little highs up top of that channel, right? What do? We look for selling opportunities up around those highs. And again, because it's such a large range, we expect to see that momentum shifting, right, to the bulls. So let those buyers try once, let them try twice, and we'll sell it back down again, right? Give us those one try, that two try buyer failure, and we can sell right back down into that range. So a lot of what we're trying to do right now is sell high because it's a real wide range, a wide channel. We're expecting that momentum to shift back and forth. And because of that momentum, we want to absorb that momentum by using the two try rule, right? And that nested two try. And again, I know I'm covering a lot here right now, and this terminology might go right over your head tonight, but that's exactly why I have that free trading class in the upper right hand corner. Grab the free class in the upper right hand corner, or grab that big red button below the video tonight. Register for that free class. That way you can get the most out of our time together every evening in our nightly newsletter. Then again, as I mentioned on oil, if we do end up rolling lower here, right, I don't want to just buy down here because this is nothing but a bear market. So what's our plan here? Our plan here is to let the market roll lower. Once we get to that 31.5 area, 32 area, we no longer want to keep selling. Now we're going to wait for those sellers to fail. A couple ways we can do this. One would be a major two try. That major two try then will give me the ability here to be a buyer off of that low, right? Also, don't forget, we talked about this earlier, right? This hidden channel pullback. Right, so two patterns here. One would be a 1-2, we call a major two try, right? That major two try gives me to buy just above the high of that second attempt to go lower. What you're doing is you're buying into the stops of those sellers. And then, of course, I don't want to chase the move higher, right? We don't chase the move higher. What I will do, though, is find that new hidden channel, and then we'll look for that buy off of that low. Bingo, just like that, right? Buy off of that low, and we can get buying off that low back up right into that trading range. So a couple different options there for those buyers here if we do finish off this move going lower. In the meantime, though, sell high, watch and see, do we get that pullback or do we start going sideways here on the S&P? And again, it doesn't look like we're gonna roll over tomorrow, but it does look like probably Monday or Tuesday next week, right, as we go into the holiday season. Be watching out for that rollover. All right, let's keep going. From the S&P here now over to another E-mini, over to the Nasdaq. Nasdaq, very similar, but there are some key differences here, right? The S&P is a little bit further down the road than the Nasdaq is right now. Nasdaq is bearish with a trading range, a bear channel, and a measured move to work with the chart this evening. The bear channel here, this bear channel, very similar to what we talked about on the S&P. Oh, sorry about that. Very similar here. I'm marking up that low. I've got that midline fitting like a glove right now. And then you got this lonely guy up here, right? He's just asking to be used here right now as a key level of resistance. Now, again, right, that channel is really wide. So don't forget, when we do get that move up, you got to expect you're going to see some buyers who will try to buy the pullback, right? Let them try. Once they try that second time, once they start to fail, we know where their stops are, and we can sell right into those stops as this market collapses back down again. So definitely remember, two try failure pattern. Let those buyers, right, let them try once, let them try twice. I'm not trying to pick a top when the momentum is so bullish like that. And again, it's all because of these really wide ranges, right, and wide channels. Now the trading range here, the trading range is another important clue. This is that same range that we found earlier on this week. We're rotating from the high to the low to the high, right? And then hopefully back down to that low of that trading range. As we come off the highs here, we know where the objective is for those sellers. The objective is down at that 68 area. And I mean, heck, if you were to include the pendulum swing, right, the amount of the move above the range, watch what I do here. I'm going to take the amount of the move above that range, make it easy to see there, measure that, measure down on the opposite side, right? And you could easily say here right now that you've got a big objective. First objective right now is for the bears back down to the low of the range, right? So first objective is back down to that 68, right? 68, 69 area down to the low of that range. But if you got an extra bolt in the gun tomorrow, though, you're going to leave that runner down around that 6,600, 6,590 area. Again, once we know where we have our trading range, I can use the amount of move above the range, below the range. That now becomes a target. So objective number 1 is just a simple retest of the range low. Objective number 2 is going to be completing that pendulum swing. And I'm always amazed at how accurate and how reliable those pendulum swings really can be. So we're putting this together right now. We're bearish. We're coming off the high of this range with this really wide channel, right? So of course I want to sell. I want to sell at resistance. I want to go up, let those buyers try again, right? Look to sell into those stops. I'm not going to chase after it as it goes lower. We'll find that new hidden channel. You got it. And to sell right off the high of that channel, right? That's the goal. The goal is to sell high, right up around, right, the high of that channel, or at least, the very least, get up above the top of that range. You know, a lot of times these wide channels, they're going to try for it, but you know, don't be too surprised if they can't quite get the top of that channel. If we just get that up, that 2 and back down, that should be plenty for all we need as we go lower. Now, could it be a range? It definitely could be a range, guys. It's very easy to see those double tops and double bottoms here. So this could easily be a trading range on the chart. Anytime we see a trading range, we want to follow the direction of the bias, right? It's a bear bias. That bear bias, what does it tell us? It tells us to sell above the range high, right? The range tells us 2 try failure pattern. That'd be a 1 try, that'd be a 2 try and back down. Or maybe we get that really big, strong spike up and the buyers try once, twice with that nested 2 try, right? Those nested 2 tries. And maybe we get really lucky. Maybe we get lucky here and we get that beautiful crown reversal. I mean, wouldn't this be beautiful, right? We get that crown reversal pattern. These are all variations of that 2 try failure there, right? Again, right? You're trying to go up, get above the top of that range, let those buyers try once, let those buyers try twice. But notice how I draw this example. We call this a crown reversal pattern. And again, you can learn a whole lot more about all of these patterns inside that free trading class that I talked about at the beginning of the video tonight. But again, you can see 1 try, 2 try, right? The buyers try once, the buyers try twice. Most important thing right now is once we start seeing it trap at that high, right, we'll sell back down right into that trading range. What if price keeps going lower, right? What if it keep going lower here? What if it doesn't go sideways? What if it keeps going lower? If we keep going lower, not much changes, guys. We're just going to shift our focus a little bit lower here. We're still trying to get up. We're still trying to get some buyer failures, and we're still trying to sell off the top of that channel or up around right the top of that channel. Again, we may not get the full rotation all the way to the high of that channel. It's a really wide channel, so we'll see if we can get it. Don't forget too, what does a reversal look like, right? A reversal, of course, would be a strong move against the bear trend, a pullback to the moving average. Remember, this is where we're looking for that failure, right, to sell back down into that trading range. However, right, if they blast off of, right, if we get that strong move higher here, what is it called again? It's called a 1, 2, 3 failure pattern. That 1, 2, 3 failure, that will now allow me to mark up that channel, find that high, and now that gives me my sweet spot, right? And I can look for that buy off the low of that hidden channel. Boy, at that point, right, at that point now, there will have to be something big happening tomorrow if they're breaking through that high. And I would imagine that this would become one big measured move, right? I would imagine now, if they do get a reversal here, look for that big measured move now. That's going to be our targets. We could find ourselves, I don't want to get too far ahead of myself, but if it does break free, right, that big round number at 7,000 would be it's a bit of a pipe dream right now, but it's definitely possible. This is the Nasdaq, after all, right, that we're talking about here. And of course, tomorrow we got retail sales. I forgot retail sales tomorrow at 8:30 Eastern time. So we get some smoking, get some nice ripping news reports tomorrow morning, 8:30. This Nasdaq could get fire here, catch fire, and run up to that 7,000. So keep an eye out for that 1, 2, 3 reversal. Don't forget, as we go lower here, 1 try, 2 try, and then back up. 1 try, 2 try, and back down. We're watching for ranges. We're watching for those 2 try failures. And remember, don't fight the momentum right now, because if we get this big jump up, right, don't try to sell it. They might hold it and run it, right? Want to wait for them to 1, 2, fail back down. We'll sell right off the high of that channel, selling off the high of that trading range. Looking good, NASDAQ. You're all good to go for tomorrow. Don't forget, 8 o'clock Eastern time. We'll be in our trade room tomorrow morning. What's up next? How about some gold? Some yellow metal? Yeah, the yellow metal is bearish with a channel, a trading range, and a measured move on the chart tonight. The channel is bearish and really flat and wide, right? Look at this pathetic excuse of a channel, right? This is one of those channels that identifies as a range, right? The channel's bearish and flat and wide, which tells me it's probably going to be looked at as a range, right? And because we have a channel, it's bearish, right? It's a bearish, right? It's a bearish channel here. Yeah, maybe there's a trend line coming down here, right, overhead, right? The bottom line, though, is we're definitely bearish. There's no doubt about that. We want to sell. We want to sell up at resistance, right? So we want to get up and sell it back down, up around the high of that channel. Now, I think the big clue right now, though, is not the big channel, not the channel that looks like a range. It's this small range right now on the chart. You'll notice strong move down into that trading range down here. This trading range is a big deal. Now you'll notice I'm keeping this little trading range down here. I'm projecting, right, that range expansion down. That creates support, but most importantly, I'm projecting it up to create a level of resistance. You combine the range expansion level at, we'll say 1250, with that trend line coming down. This really sets up to be a great spot here to look for a sell. Now, remember we talked about this earlier, right? Anytime we see a trading range, what are the 2 things we look for? One is bias. This is a bear directional bias, which tells me to sell above the high of that range. And the second thing this range tells us is to find those levels of resistance above and use that to sell as resistance. And what's our favorite pattern? The failure pattern, right? So we want to go up, 1 try, 2 try, back down. Or don't forget, if this momentum really gets cooking here, right? If it runs through up to the high of that larger channel, then let's think about the nested 2 try, right? The 1, the 2, and the back down, right? Or maybe we get lucky and we get that crown reversal, right? Which we love trading every morning, right? In our trade room, right? That little crown reversal with that. Basically, it's a 1, 2. It's a nested 2 try, right? With that trap high. No better way to sell high at resistance than just above that prior swing, because now you're selling high right into a point where those buyers are getting roped into a breakout. Love that. Again, we call it the crown reversal pattern. And again, you can learn all about these patterns. Grab that free trading class that I mentioned earlier. Trust me, it'll be a week of your time well invested, and you'll see hundreds and hundreds of examples of real patterns we find every day in our trade room. So again, couple components right now. With all this information right now, we know we have a bear channel. Right? We know we got that bear channel. Bear channel says, yeah, try to sell off that high. It's a wide bear channel, right? So what does a wide channel tell us? Momentum will be strong, so let them try again, right? You got it, you got it. So you're picking up on this now. The wider the channel, the more the momentum, the more tries you're gonna let that side use before they're gonna give up on this, right? Very rare, look back here, right? Very rare do we see a market make a huge run, right? And then just turn. Usually they're gonna try once, try twice, and then back down in, right? Go up once, twice, back down. You'll see this over and over and over again. I don't want to try picking tops and bottoms. I want to incorporate levels of resistance by absorbing that momentum with the 2 try, right? And then back down. And again, we've got that trading range. The trading range is a huge clue right now because that trading range gives me a precise location of where I have resistance. Combine that with that top. And again, I know I'm selling a broken record right now, but 1, 2, and back up. And remember, right, there's a lot of variations of a 2 try failure. 1, 2, major 2 try, right? Or that up with a nested 2 try, right? Or of course, right, one of my favorites, that crown reversal. Gotcha, right, off of that prior swing. Beautiful, beautiful pattern. Now, what if we keep going lower here, right? What if this trading range breaks down? What if we just kind of keep rolling lower here? This not really much changes. If we do start rolling lower, almost think of like the midline of this as the top of that spiking channel. I'm going to mark up those highs and we'll still keep looking for sells. With this time though, looking for bull traps. Anytime I see a spiking channel pattern like that, I'm looking for bull traps up above those highs. And you're more than welcome to combine the bull traps along with those buyer failures to increase your odds of success. And again, I know I'm covering a lot right now, so I want to make sure I give you as much as I can on tonight's video so we can get ready for tomorrow morning's trading session. But I always want to remind you too, you can log into your free trading course and learn a whole lot more about these patterns. And of course, what does a reversal look like? A reversal would be a strong move up, a pullback to the moving average. I'm not going to buy that pullback because remember, this would be what I'm looking to sell, right, as it fails. If they do succeed and we break higher, remember 1, 2, 3, reversal, big strong move higher here. Now mark up that high, find that hidden channel, mark up that prior swing, right? Now that gives a sweet spot and now we're looking to buy right in that sweet spot there. And again, to get into that trade, we'll use bear traps, seller failures, right? Crown reversal, we get lucky. Maybe we get lucky on that, get a crown reversal off that low, but we're trying to buy the low of that channel. And again, on gold, right? On gold, this trend, if you recall, this has been for the most part a very bullish market, right? Really ever since we started trading this contract. It's been a very bullish market. So a nice strong trend here could easily, could easily kick into gear. And this could be a nice big run higher here for that big measured move there. So there is definitely potential. It doesn't look like it right now, but hey, tomorrow's a brand new day. And of course, we'll see if those bulls can get their act together here, right, and steal some thunder from these bears right now. Let's keep going here. Let's keep going here. Over from the gold, wrapping up now here on the euro. Ooh, I love the look of this chart tonight on the 6E. Don't forget the euro is a rollover watch right now. We are watching the euro right now. It does look like, as I'm recording this right now, it does look like, if you notice here, the 319 contract, yep, it does look like you've got more volume right now on that, just barely on that 319 contract. Honestly, you're probably not going to have much of a difference tomorrow between which contract you trade, but it looks like right now that 319 contract is in the lead by a nose, if you will, on the euro. So we'll see how tomorrow morning looks. We get back to our desk. Euro is bullish as we come off 2 trading ranges, a support trend line, and of course, we got a beautiful 2-try failure pattern on the chart tonight. This chart is going to really wrap together a lot of what we've already talked about tonight. It's a great chart for you guys to learn off of, and hopefully we can use it to earn something tomorrow too. The weekly trading range. Let's go back in time here, right? Here's that range, right? There we go. Here's that trading range here. You can see that big range, right? So we're watching as the market rotates back and forth. Well, we last stopped off at the low. So now we assume we're trying to go back up and retest the high. So the objective right now is to go back up and retest the high of that trading range. That's the big trading range. right? That's the large trading range. And that large trading range tells us goal is to go back up and retest the high. In fact, if you were to use the same technique I talked about on the gold, if I mark up that low, hold on, get that low there. If I mark up that pendulum swing, right? Pendulum swings down, pendulum swings back up, right? And you're talking, 14,400, right? 14 and change up here, right? For that big objective, right? Up around that high there. The amount of the move below the range, the amount of the move above the range. Pretty easy, right? Pretty easy idea. Make no mistake though, guys, right? We're taking most of our profit off at the top of that range tomorrow. That's where the meat and potatoes will come off, right, on the chart tomorrow. So the goal right now for the larger range is to go back up to retest the high. But looky, look what else we have here. We have a trading range right in the middle. We talked about this last night, right? The rule of thirds, that third of the middle of that trading range. Now, we talked about this earlier. What's the plan? There are two things we look for when it comes to a range. One was the bias, right? A bull bias going in. Second thing was the failure, the 1, the 2, right? This is everything good about ranges right there. Beautiful example. Just before the lunchtime session settled in here this morning on the euro, we saw a 1 try, 2 try, and the beautiful part was it came right off the low of the large range. It combined the range expansion level, right? All the stuff I've talked about so far. This is a chart that warrants our attention because it really combines everything we've talked about and illustrated so far on this video. Strong move up into a range, says buy below the range. How do we do it? Let the bears try it once. Let them try twice. Use that range expansion level as key support. Surprise! And now we go running back up into that range. But wait, there's more. Maybe of course, maybe you want to call this a nested 2 try, right? We go down, we got 1, we got 2. Oh, baby, look at this possible trap low setting up here now for a crown reversal, right? We've talked about these a couple times already tonight on the video tonight. But we are seeing one right in play right now. We saw a gorgeous example of that earlier, right? With the 1, the 2, and that trap, if you recall, from last night's newsletter. We're looking for almost the identical pattern here right now. Down, right? We got 1 try for the bears, 2 tries. I hope we get that little trap low, right? That will be our crown reversal. That'll incorporate off of that rising support trend line. Man, oh man, I'll tell you, that's a great looking setup if we can get that deep pullback. Now, what if price keeps going higher here? What if we keep on rolling higher here? Then what do we do? Not much changes. I don't want to buy into the high of this trading range. So what I'll do is I'll keep looking for those traps. I'm going to keep looking for that little trap low. I'd like to use that rising support trend line as well. That would really make my day here, right, for tomorrow. Now, what if we just run higher here? What if we don't get any pullback? What if it runs higher here? If it runs higher here, be very careful trying to sell off that high. We've got that momentum swing, that pendulum swing, putting us up around that 14,400. If we do end up running higher here without pulling back to let us on the bus, 1 try, 2 try, and fail back down. Remember, we get that big, strong move up. I'm expecting that relatively strong bull momentum. I want to fight that momentum. I don't want to sell into it either. What we'll do is we'll let them try once, let them try twice. Let those buyers exhaust themselves, and then we can focus on selling off the high. That may not happen until, same type of thing we saw today, 10 o'clock, 10:30 here this morning was when we got that pullback right below that range. We may see the same thing happening around that same time, right, tomorrow morning. And again, as I mentioned earlier, we're watching rollover, so be aware of that 319 contract for tomorrow. Keep your eye on the volume. And as always, right, too, we'll be in our trade room tomorrow morning, 8 o'clock Eastern time. And we're going to do all of this together with all of our advanced members. So again, I've covered a lot here tonight on the video newsletter. I hope you learned a ton. I hope you'll use it tomorrow. I hope I see your face tomorrow morning with me in the trade room. We open up at 8 o'clock Eastern time. Learn more about membership with our advanced classes. Our advanced course, right, includes our trade room, all of our tools, all the cheat sheets, checklists, our beginner, intermediate, and advanced classroom sessions. It includes all the lessons, all the tools, everything you need, unlimited access. It's all wrapped into that advanced course. Learn more about that on our website. Don't forget, I got a great free trial. That free trading course is included with that free trial. I'll also send you an invite. Come out and join me in the trade room as a guest as part of that free trial. So grab that free pass. Come join me in the trade room here on that free trial, or pick up the phone, call that toll-free number. My wife Megan and I are always here standing by to answer all your questions. And as always, guys, signing off here for the last time for 2018. I can't believe this year just flew right by. I have to admit, though, it's been one of the best years of my career. Hopefully, it's been a great record-breaking year for you. We got big, new, fresh highs coming for us in 2019. I'll be back here early January. The 1st of January is a holiday. I'll be right back here that Wednesday, January the 2nd is our next edition of our nightly newsletter. But we're not done for the year yet, though. We got some more money to make tomorrow morning in our trade room. Am I going to see you there? Hopefully I will. 8 o'clock Eastern time tomorrow morning. And as always, be well out there. Be nice to each other, will ya? Have a safe and happy holiday season, and be here next time. Adios, amigos. Bye-bye.